It was a year before the Black Monday crash. Wall Street was in a euphoric frenzy. But for one rising star, the world was about to stop.
I was so angry at myself. I was just mortified at myself.
Larry Fink, the first darling of Wall Street, was crashing terribly. In a single quarter, he lost $100 million. That failure should have ended his career. Instead, it became the foundation of the most powerful financial empire in history.
Another too big to fail asset manager, which handles over $7 trillion in direct management and another $20 trillion through their proprietary software.
I mean, Larry Fink, with those numbers, he can say whatever he wants. BlackRock was fantastic.
Today, his company BlackRock manages over $10 trillion directly and monitors another $20 trillion through its proprietary software. He is the man who owns the world, and it all started with a single mistake. Larry Fink grew up in Van Nuys, California. While the 1960s were a time of cultural revolution, Fink was focused on a different kind of structure.
It was such an exciting, heady time to find out that under the official reality, there was this seething turmoil of young people learning new music, new thoughts, new ideas, new literature, new poetry, new ways of being.
He studied political science at UCLA, dreaming of a life in politics before pivoting to an MBA. In 1976, he landed at Boston. The bond market was sleepy and antiquated, but Fink saw an opportunity to wake it up. While others traded on gut instinct, Fink bet on technology. He was one of the first to put a computer on a trading desk.
I started First Boss in 1976. I was the first Freddie Mac bond trader. And so the mortgage market was just at its infancy. And then in 1982, we had the ability to put a PC on our trading desk. Before that, you had no ability to put a computer on a trading desk. And it was very clear to me that if we could have computing power on the trading desk, we were going to have the ability to dissect cash flows of mortgages. And we were the most profitable component of First Boston in 83 and 84 and 85.
By early 80s, the economics was deregulated.
The highest order of business before the nation is to restore our economic prosperity.
Fink utilized his computing edge to help pioneer a new financial weapon, the mortgage-backed security. Fink put together thousands of home loans into a tradable securities. It was a gold mine. Fink generated over $1 billion in profit for the firm. He was the most profitable man at First Boston.
When you're at that level, and you've had all of that success, and you have all of this money,
you see, success breeds arrogance. Larry Fink thought he was invisible. In the second quarter of 1986, interest rates moved unexpectedly, and he was making losses.
there's a mindset that you're almost invincible.
So you could work a lifetime creating wealth under certain assumptions that something can't happen. And then bang, you lost everything for your whole lifetime because you thought it couldn't happen.
Gonna get it? You're not gonna get it.
When you started having those types of successes, the firm gave you more capital. We were taking bigger and bigger risks without the attended risk technology to navigate that risk. And in the second quarter of 1986, we lost $100 million.
He wasn't fired immediately, but he was cast aside. The golden boy became a pariah. At that 6 years old, Larry Fink walked away. Unemployed but determined, Fink obsessed over why he lost that money. The answer was risk management. He needed capital to build a firm that prioritized risk over anything else.
I said to myself 30 days after we lost money in that quarter, even though we made 130 the first quarter and lost 100 of it in the second quarter, I said I'm leaving. But it took me a year and a half because I never ever thought I was going to leave, but it took me a year and a half to try to determine what I wanted to do next.
Enter Steve Squazman. Squazman had recently founded Blackstone, a boutique private equity firm. Like Fink, he was an exile from a major bank, Lehman Brothers. Squazman put up a $5 million line of credit. In 1988, Blackstone Financial Management was born. The partnership worked. Within 5 years, Fink had $8 billion under management. But he wasn't just picking stocks. He was building a risk analysis machine. He vowed never to lose money blindly again. You see, two alphas rarely coexist. Larry Fink wanted to give equity to his employees to attract top talent. Squazman, on the other side, protective and conservative, refused. This friction caused a fracture. Larry Fink chose to walk away. He found a buyer from NBC Bank who offered to purchase his stake at Blackstone.
It took me a year and a half to assemble my thoughts, and I told the story to Steve Schwarzman and Pete Peterson, and they loved it, and they had more confidence in me than I had myself. They wanted to go right ahead, and we did that. And
unusually conservative, actually unusually risk-averse for a successful entrepreneur and investor. This was a visceral thing, a primal impulse not to lose money.
Squazman agreed to sell the asset management unit for what seemed like a great return of his $5 million investment. It will go down as the single biggest mistake of Steve Squazman's career. He sold the engine that would become the BlackRock just before it took over the world.
Ego is a great thing in business. Ego. You show me a titan of industry, and I'll show you somebody with a big ego.
By the late 90s, BlackRock merged with B&C's asset management arm. They grew from billions to hundreds of billions. But the true test was yet to come. In 1994, Blackstone rebranded as BlackRock. They were independent, but they needed a redefining moment. It came from a mess left behind General Electric.
Remember our old kitchen?
Yeah. Smile.
GE, we bring good things to life.
GE acquired Kida Peabody, an investment bank loaded with toxic mortgage assets that no one could value. It was a $10 billion bomb. Wall Street ran away from the portfolio. Fink ran towards it. His team used their proprietary analytics to disassemble the complex derivatives, pricing them when no one else could. They successfully liquidated the portfolio for GE. BlackRock gained a new reputation, the Ghostbusters of Wall Street. When you had a toxic mess, you called Larry.
If you're confused about what he did and how he did it, you're not alone. It's called financial engineering. It's about packaging, restructuring existing securities into new ones. While some of these securities are indeed valuable, they're only available to big players in finance.
2008, the subprime mortgage crisis. The very financial instrument Fink helped pioneer in the 80s had mutated into a global poison.
Ripped markets overnight with Asian stocks
Stocks fell off a cliff, the largest single point drop in history.
Share prices continued to tumble.
In a matter of days, one of the pillars of Wall
Bear Stearns collapsed. AIG was teetering. The US government needed someone who understood the complexity of the rot inside these banks.
A little bit of financing. We only did it because we were asked to by Hank Paulson. And we thought if it went down, that could be a huge crisis for the globe.
Treasury Secretary Hank Paulson didn't call a regulator. He called Larry Fink.
Mortgage-backed securities, he was called in to help and to clean up. With people like Hank Paulson and Jamie Dimon and Tim Geithner on speed dial, Larry Fink helped engineer a remarkable rescue for the financial industry.
BlackRock was hired to manage the toxic assets of Bear Stearns and AIG. They cleaned up the wreckage of the global economy. While other banks failed, BlackRock became the fourth branch of the government. Emerging from the crisis, Fink saw a new future. The era of high-fee stock pickers was ending, and the era of passive investing, ETFs, was beginning.
The best single thing you could have done was just buy an index fund.
Statistically, this is the simplest way to build wealth for probably 99% of investors.
The markets will grow over the long term. And so because of that, we can invest into some of these different funds that are available to us.
Every year, it turns out that probably 2/3 of the active managers are outperformed by the index, and the third that outperform in one year are not the same as the ones who do it the next year.
Just like the fishing industry, very few people get wealthy by hunting whales. Most of the revenue comes from smaller fish with large volumes. I guess to Fink, he realized that the future of investing is about tapping into the pockets of smaller investors.
In 2009, Fink made his checkmate move. He acquired Barclays Global Investors, which included the iShares ETFs brand.
They have $50 billion in Lockheed Martin and Northrop Grumman each. It's been the most successful. It's not a bank, it's just an investment company. And it's been the most successful in the world. So it's huge, it's massive.
Suddenly, BlackRock wasn't just managing pension funds. They were holding shares in almost every major publicly traded company.
Larry Fink now has more potential power to influence the US economy than anyone else. He is the JP Morgan of the 21st century.
Apple, Microsoft, Exxon, Coca-Cola. Look at the top shareholders of the corporate America, and you will almost always find BlackRock at number one.
And we're the largest pension manager in Japan. In Mexico, where we are now becoming, we just did an acquisition, we're going to be the largest asset manager in Mexico. We have one technology pipe worldwide that connects everything we do at the firm.
But with $10 trillion in assets, asset manager feels like an understatement. Fink has begun using this weight to influence corporate behavior, pushing for ESG, environmental, social, and governance standards.
And I actually believe there was less accountability at boards than there should have been in global companies. And so we've now been asking companies, please describe your long-term plan. You tell us what long-term is, but most importantly, please just tell us that you reviewed your long-term strategy with your board.
This immense power has made him a target. To some, he is a pioneer of conscious capitalism. To others, he is an elected emperor enforcing his will on the global economy. From the humiliated bond trader who lost $100 million in 1986, to the man whom governments call when the world is burning, Larry Fink learned the hard way that you cannot eliminate risk. But if you are smart enough and big enough, you can own it.